hundreds, right? That was the final agreement that this candle had. So when you read that, that tells you, okay, that has more seller strength. But what's the other clue that we're looking at right here? It's not just about, oh, if the candle closes below, that means sell. It's, again, analyze what has happened in the past, which is candle closes below, but look at those retests of that area. You see that? Those are wicks that took place after the candle closed below. Meaning, if we see that candle closure below the area of interest, right, that's our candle, we can still, on the next candle, see something like a wick get created, and then overall, the next one continues lower. But the wicks get created, you know, whether it's, this is my attempt at creating a wick. You guys get the idea. Basically, what I'm trying to say is that you might see pullbacks take place once this hourly candle closes to correct some of this move. If we look at price action and the overall momentum, we could even pull back as deep as the 4520s, which is these wick highs right here, which on the lower time frames is this. On the lower time frames, a pullback into this area to then sell off, as we've done in the past, would not be anything crazy on gold. So we can either see a pullback take place all the way back into those 4520s and still be respecting that structure and momentum that we're on, or we won't even get such a deep pullback. We might just get the candle closures below our area, maybe a retest of those 4510s before overall continuing to push. Or gold says F you, and it just, look at how we basically mirrored that move, this move, in a very similar way. It actually faster in this case. It happens a lot of times, you know. It's something that you want to pay attention to because it does happen. So be it. But what I'm noticing is the fact that price, let's follow this. It makes a low, it makes a high, it makes a low, it makes a high, makes a lower, lower low, lower high, lower low. So this is what, Marshall, you said your name is, right? This is what you were talking about, that we're creating still new lows, lower high, new low, new high, new low, high. What you said, I would say that's on point. Let me see. Lower lows are indicating a continuation to the downside. That's another good one as well. I would agree. What I'm paying attention to, or what I was trying to pay attention to, is the fact that those lower high points kept getting lower and lower and lower. So that basically ties in to what you guys are saying, that we're creating new structure points. We're creating new areas where, for example, you have these lows, these highs, equal lows right here still, but then this high is lower than this one, right? Okay, following it, another low gets created for us, right? That's another structure point. So that's still signaling that momentum is still on the downside. We can't have price break above our area of structure on these lower time frames now. So what does that mean? That means this needs to be respected. Price precisely goes and basically retests that area. But overall, if you look at the candle bodies, they're below. So once again, another one getting lower. So basically, you follow along, you have a new low, same thing. Okay, we have a new low. Momentum is still in our favor. If we want to continue on this momentum, we need to see price respect previous market structure points. So it's basically this point right here. What does price do? Goes and retests close to that area, not precisely, but it got very close, creates a new lower high for us. Once again, lower and lower and lower and lower as we're pushing to the downside. And so you learn to follow along with this momentum. So right now, what does that mean for us with the current price action that we're seeing? That means that, again, momentum is still pushing lower. Those highs that get created still respect each previous one. They've gotten lower each time. So what does that mean for us? If we need this momentum to pick up on, to continue, and you're in sales or you're still looking out for sales, right? Whatever the case may be, you might be managing your risk, securing profits, whatever the case may be. We still want to continue with that overall flow. That means that right now we have new lows. We need to break that. And if we break that and do a pullback, the pullback ideally does not get above this area right here. So it'll be like something like that. Because that's what's going to signal to us that that overall momentum is still pushing lower. You get it? That's how I'm sure you guys have seen that with a lot of people that use trend lines. They put the trend lines and put price into like channels, they call it. I'm not the biggest fan of that, but sometimes it's good to have that visual too. But you get the idea. Again, the overall, let's call it that channel, right? To point it out again. You're in here, right? Pushing lower and lower and lower and lower is what it's doing right now. Once you start to get those shifts, you get those clues here, meaning you won't get, what are the clues going to be that the shift is dying, momentum is dying? You would get failure to break any lower and price actions start to trade above previous structure points. Meaning, okay, you don't get new lows, you start to break above previous areas that price needed to respect or that you created new lows from, which this is one. Wow, that's so crazy. That's one. So if you don't get a push lower and you start to see price action exhaust, say at that area right there, just by pointing out the current price action, and you see that it's now climbing above a structure point that was created for us on the lower time frames, then you know that the seller's momentum that we were following has died out for that moment. At that point, you go back to understanding, okay, well, that structure point is starting to get broken above. Let's pay attention and see where that pullback can go to. Where is that pullback likely to go to? Well, we have our key area of interest, which is our key level, the 45.10s, 45.12s, our key, I don't even want to call it key level. I want to call it key price range, right? That's where you would be on the lookout for. Okay, let's be on the lookout and see if, because we're looking at the lower time frames, there's going to be times where this is not going to be perfect. You'll see times where it will break above here, maybe even do a deeper pullback and still continue overall, right? But I'm talking about in terms of a scalper's perspective, someone that's really diving into those lower time frames and understanding those movements, right? That's how I typically follow it during session, right? You're only really doing this during that session to really pick up on the momentum, pick up on the price action, whether or not there's a lot of volume. You see how we use different confluences, different tools. I'm not here trying to rant and trying to convince you guys to use certain things. I'm more so showing you the importance of using these tools. Tools like lower time frames, structure points, structure on higher time frames, intraday time frames, lower time frames, right? Not being blinded to just one, trying to connect and align them, all of them. What else do we use? Key levels, key areas. We use fundamentals. We use dollar to our advantage. Look at dollar, how earlier, remember we were talking about dollar? It was at 0.17%. Right now it's at 0.29%. We're climbing on the dollar. We're back at highs on the dollar. As gold is still continuing to push lower. Again, it's clues that we get from the markets for us to have a stronger edge. Make sense? And then look at that clean structure overall started to get created after that 4-hour candle close, which was at 9 a.m., which was when it finally really closed below our area of interest. We had the retest take place, did not even climb back above our key area, started to get back below the zone, and then pushed lower. You talk about breaks and retests, you got to put this on the Hall of Fame right there. Perfect candle close below, perfect retest, perfect continuation. Market structure started to get created really clean. We had lows, lower highs, new lows, lower highs, new lows, lower highs, new lows, lower highs. At this point, again, just keep off marking off the lows until it finally is going to eventually come to a stop. You're going to eventually get to a point where you have all these things marked off. The lows, the highs, the lows, the highs. No new lows get created. Sheesh, that was a volatile move right there. No new lows get created. Previous points start to get broken, and then you see price doing this. and it starts to go against it, at least momentarily, once that momentum dies out, which so far it hasn't. It hasn't shown signs of it dying out because we just continue to see strong pushes down, minor pushes up, right? You see that clear, where it's like a strong push down, a minor move up, another strong push down, minor, strong push, minor pushback. Again, we have these lows basically at the 44. We're reacting around the 44.88 right now is where price is showing us reactions. Again, I would say even if we pull back, let's say here, it can still make its way towards the downside. We need to see the exhaustion. So like price exhausting and failing and then breaking above for us to shift out of that overall structure. And then that's where we see that shift in momentum most likely take place. For the most part, when price action flows good and we talk about these concepts, it looks perfect. It looks really good. It looks like if it's the first time you ever see these things, it's honestly